Good morning, guys. Welcome to Equity Guys. Today we're going to go with the pre-market view. My name is Chirag, an ISM certified technical analyst, and let's get into the view for today. Exactly like we predicted, Nifty was, had a gap down, but then there was a strong recovery from those 24,635 levels, and it hit a high of 24,882 levels. So there was an amazing recovery there, but towards the end there was a sell-off. But that initial prediction of that rally was absolutely correct. It did, close somewhere in the middle, right? So, but it was still closed on a positive note, Nifty. So, looking at what will happen today, we see that Nifty compared to Nifty futures, right? Nifty futures is trading at a premium of 100 points. Bank Nifty futures is trading at a premium of 248 points compared to Bank Nifty Mother Index. And we see that there is a 137 point gap down in GIFT Nifty compared to GIFT Nifty and the Nifty futures. So it is starting with a gap down, which is not a positive look for the Indian markets. But compared to how the futures is doing to the mother index, that those are both bearish in nature, right? And then looking at India VIX is up about 3%. So India VIX is that fear factor. So as it is moving up, we do see that it is bearish. So a lot of people will get a little scared when India VIX is up, that 3%, right? And then moving on down to Nifty Bs and Bank Bs, we have 0.3% lower for Nifty Bs and 0.28% lower for Bank Bs. Gold Bs and Silver Bs are also down 0.23% and 2.71%. So you definitely see selling going around in all the parts of the market. So that is definitely not good. You see a lot of bearish data that is there today. In the sectorial indices, we just have to focus on a couple of major sort of sectors. One is the auto sector, which is down, banking sector, which is also down, IT sector also being down here, and then and the infrastructure and real estate also, which is down in this sector. So extremely bearish view for the sectors. Moving on to the NSE data, we see that there are 1,900 declines and only 1,000. So definitely bearish in nature because all those stocks closing towards the day low will impact the market. Looking at the FII DII data, right? Looking at it from the 31st, we see that there's almost 5,000 rupees selling in FII in the cash market, and DIIs have matched this sort of selling there, right? Which is extremely good from the DIIs. But moving on to the FNO market, we do see that there is 1,235 crores of selling in index futures, and in stock futures you also see selling of 1,530 crores there. So definitely selling on all fronts there, which is extremely bearish in nature. Looking at advance decline ratio, we do see that there are only 13 advances and 37 declines, and only 1 advances and 11 declines. So definitely bearish in nature in that aspect. You have 37 of the major stocks in Nifty being on the lower side, so which is not at all good. Definitely looking a little difficult for the markets to go up. Moving on to option chain, we do see option chain, here we see that on the right side where the puts are, we see buying in the money puts, and then we see selling in out of the money puts. So you do see there could probably be some hedge positions here, but the market is definitely looking to go down. They're hedging some of the in the money puts with out of the money puts. That could be a possibility. Moving on to the call side, you see selling on both sides. So definitely market the data is bearish. Market is looking to go downwards, but at a slower rate because it's only buying in the money puts. Looking at option chain, for the next expiry here, we see that there is strong buying of puts, both in the money and out of the money, and the puts are on the right side of the chart, and this definitely shows extremely bullish data here. And if you look on the right side for calls, both in the money and out of the money data, both of them are extremely bearish in nature there. So you see the entire market is on a downtrend here because there's a lot of buying inputs. Now, keeping that in mind, The resistances is something that we can understand in this type of market. So we definitely see resistances at levels of 100. So 24,800, 24,900, 2,500. We see those as key resistances where the market can possibly go up, take resistance there, and come back down. Moving on to the global indices, we do see that Dow Jones, S&P, and Nasdaq, sorry, Dow Jones, S&P, and Nasdaq, right? We all see them closing towards the day low. Definitely, extremely bearish move from all three of the markets. If you look at the nature of them. Moving on to Europe, we see that in Europe, DAX, FTSE, and CAC, all of them again closing very negative, extremely bearish data from all of those three markets. And finally, moving down to the Asian markets, we see that Nikkei is running at around 0.71. 0.71, 0.7% lower here. It's extremely bearish, and you have Kospi running at almost 3% lower than the market. So extremely bearish data there too. Looking at the stock futures, actually moving there, we see that the US stock futures, you see US 30 with almost 0.1% lower, US Tech 100, US 500 being 0.13% lower, and US Tech 100 being 0.18% lower here. So extremely bearish data there too, not at all good for the Indian markets there. Looking at the ADRs, we see selling in Infosys and Wipro there, almost 1% selling in Wipro and Infosys. And then for the other areas for where it is buying, we see ICICI Bank seeing almost 1% buying, and Dr. Reddy's almost seeing 1% buying here with 0.85% there, and Make My Trip also is 1.1% that is being bought. HDFC also is seeing a little bit of buying, almost 0.5%. So there is a bit of mixed data between Indian ADRs over here. And then looking at the PCR data, again, one thing that we missed in the option chain was the PCR data again is closer to about 1. So Nifty is at that neutral levels here. So we can definitely see probably a bearish to neutral market today is in Nifty over, because we did see the recovery happening yesterday. Moving on to the view for today, 24,600 is that key level that it should be able to defend here. So those 24,600 levels should be defended, and our support exactly comes near that 24,635 levels S1. So S1 should be respected here today, and we want to see a break of the inverted hammer that has been formed in the daily market here. So the markets keep going higher, even if there is not much of a break today. That low of 24,635, right, that should be defended here today, and that will be a very key part in how the markets close today. So make sure you guys always trade the same sort of setup, same time frame, so that you guys have a good understanding of what needs to be done, and you guys have a more clarity on the markets itself. Make sure you don't trade your emotions and you trade your setup, so that you have better clarity on what you are doing. But thank you guys for looking at the pre-market video. See you guys tomorrow.